Hard to believe it's time to wrap up another day, but that's the way it is. Time flies when you're having fun. We've talked about it all day long, how volume is moving up in each of these distributions, whether you believe in the fundamental news and which way the market should be going or not. I mean, it's a part of the equation, but you cannot deny this. And you can see that the volume may be accelerate to the upside, may be accelerating right here. Now, we talked about we wanted to be long first. We could sell failure to take out the 85 to 90 area, but we expected the market to retest the highs at 1892.50 before this move was over. You never know if it's going to happen today or the next day and the rest of it, but you can look at a screen like this, and it's not too difficult to come to the conclusion, I should be finding a place to buy this, and that's what we did this morning. We had hoped to buy 75 to 77. The market made you pay up. You had a shot at buying the 78 to 80 area, but that was it. Strong market, pointed to the upside. The Y period low was right at 79. As you'll see on this next chart, when I get it to pop, and all day long it has paid you to buy range extension. So this market is pointed higher. It's not rejecting these levels. That suggests continuation. We have ourselves a strong P. We've got time at 86, and we've got volume, time at 88, and we've got volume at 89. So we have ourselves a P, and the market is pointed higher. My guess is we're going to close this above 92.50. So the easiest trade to see is to sell failure to take out 92.50. 93. The next easiest trade to see is selling 99.50 to maybe 1901, 1902 and a quarter, somewhere up in here. You say, well, we got to get through 95. That's true, but my assumption is that we're going to close this thing above 92.50, which ought to put us right at 95. On the buy side, we've got volume at 89. We're at 91.50. It's okay to buy 90s. It's pretty aggressive. So 88 to 90, give ourselves a little wiggle room. This is for the overnight session. And then the last rotate down was 86.50, so our 85 to 87 would be our buy too. So strong market, it's pointed up. I don't see any signs of selling yet. The trade to see is sell failure to extend the day sessions high, whatever that happens to be. So we'll make it 92.75 to maybe 95, and then 99 to 01 for a sell, and on the buy side 88 to 90, and then 85, 87. We always like to execute at our number 2 spots because it gives us an advantage. It gives us some wiggle room trading from number 2 back to 1 in case the market doesn't do what we think it's going to do. Okay, looking at the note, the F1 screen will show that we do have a higher high and a lower low. We've got an outside day. An outside day generally yields a trading range, but I think the market is really dependent upon what the E-mini does. We do have news tomorrow that can shake things up. Retail sales, but you can see we've got a slightly higher high right here, and you can see that we've got a lower low and we're going to finish weak. So this one really suggests that we're sellers. Now this news will apply to the E-mini, and it's news that could shake the market up a little bit. Retail sales is called higher for next month. For the last month at +0.3. Ex autos at +0.6%. So if those numbers come in greater than forecast, it will be counted as a sign that the economy is strengthening. And it's on its way back up, and that economic weakness over the winter was caused by cold weather. The focus will be ex auto. +0.6. And ex gas that they're starting to report now. Actually, I didn't write that down, so I don't know what it's going to be. They have import-export prices. No one will pay any attention to that. But they like to see import prices down and export prices up. Then business inventory at +0.4. So the focus will be ex autos at +0.6. I think we're going to head lower. So for the overnight session, 21 to 17 a buy. If the market doesn't break, they're waiting on the retail sales news, but everything here is pointed lower. Then the next buy will be 9 to 13. The pattern is after auctions for the market to sell, so I'm still playing that. We closed the market at 23.5. Last rotate up was 26. Then basically B period 28. So our sell is going to be 25 to 29. And then 31 to 03. Given the strength in the financials with the rally that's going on in the E-mini, and we didn't do a lot of volume in the E-mini. Its volume was off quite a bit today. You would expect making new highs that people would be falling over themselves buying it. We didn't do a lot of volume in the note either. So this is a low volume day. I don't think anybody really knows what Putin's going to do over the Ukraine, eastern Ukraine itself, but he says he wants a peaceful resolution. We'll work this out at the negotiating table. Funny, a poll came out that the Ukrainians, eastern Ukrainians, did not want to secede from, and this is a poll, wasn't at the ballot box, don't want to secede from the Ukraine, they just want more autonomy. So it'll take some time to figure out what's going on. The knob spread came in a couple more ticks today. The 30 years definitely pointed lower, so the last rotate up was 14. We're at 11. We have these lows in here, so 13 to 17, sell 1. And we'll make 21, 25 for sell 2. I think we could go a little bit lower, so we'll open it up a little bit. We'll make 01 to 29, buy 1. And buy 2, 25 to 21. And when I took my notes, Jimmy, it was at 23.5, so that's come off a bit more. But one of the easiest plays going is to sell the knob spread on the auction, the last auction, and buy it back on that Tuesday morning of the new auction and write it down for a week, then write it up for 3 days. The primary dealers will not bomb the market during auction week. And post-auction week, they sell futures short in anticipation of covering those futures to support the market. They make money up and down. It's a great, I mean, it is a great franchise to have. I mean, you can just mint money, and they do. Most of the billionaires in the United States, although we play second fiddle to London now, reside in New York City. That's where the money is. Power is in Washington, D.C., and fame is in Los Angeles. Okay, gold, the 03 to 05 was our number 2 sell zone this morning. We like that. We had identified at the start of trading today this area right in through here is pretty good resistance, and it did hold. As far as where support is, you can see our 85, 87 is pretty good support. It's a ways to get down there, so we'll make 90, 92 buy one. Then buy 2, 85 to 87. On the sell side, we're at 96, so last rotate up stopped at 99. We'll make 99.01, sell 1, and then 4 to 6 for sell 2. Look for quiet trading in gold. You don't have the central banks out there bombing the market because they don't have to. The large institutional investors have said that the bloom is off the rose. Doesn't pay to tie up your money in non-dividend, non-interest-bearing assets. So we only have the retail account that's a buyer out there, and as long as things stay unsettled, they're not buying for a return on investment, they're buying for return of investment. And they're buying out of fear. Okay, looking at crude, we got a seller at 101. 101 held today. We got a buyer at 100. So my guess is we're going to work our way down to 100 with some, without some news of new fighting in the Ukraine or the eastern Ukraine or places farther west from Kiev east. I have a good friend, a trader, used to own a seat in Chicago from the Ukraine, a trained classical musician that ended up as a trader. Go figure. But he says it's just one group of thieves after another. He says the place is so corrupt that it doesn't matter who's in power. They're going to steal the treasury from the treasury. So we've got 101 here as resistance. Last rotate up was 76. It's very, very aggressive. Sell 1, 75 to 101, and 101 and a quarter to 101.50 for sell 2. On the buy side, I've been hoping to buy the 100 area, 125. Maybe we get it today. I mean tomorrow. And then we'll make it 50 to 75 for buy 2. And last but not least, the euro. Again, very, very quiet trading. I mean, the market had a couple of points taken out of it off of Draghi's remarks last week, so we don't have people falling over themselves to trade the euro. But the consensus is that the euro is headed lower. We've thought that for over a month. It took a long time for that to show up in the marketplace. It took Draghi picking up the mic after last week's European Central Bank meeting. And the press is talking about how Draghi has to follow through. Now, we've talked about it many times. There are ways other than purchasing assets outright that allow you to create liquidity, and you can do this with repos. And my guess that's because he's not allowed to buy and hold paper, he can repo for 2 years, 3 years, 5 years. Paper that the banks are holding, count that as security, and at least buy time, take those securities off the balance sheets of the banks. And the banks are where sovereign debt is owned in Europe. They don't, because the government takes care of them from cradle to grave. There is no retirement system. And so you don't have long-term government paper, AAA paper going into pension funds like we have in the United States, where guaranteed payment, dollars certain on such and such a date in the future can be counted on. And so the banks end up owning the paper. And so that's why all the effort is to prop up the banks in Europe. So we're going to sell 70s to 80s and then 90s to the buck. On the buy side, 40 to 50 and then 15 to 25. I think the market is going lower. That's all I have for today. We'll see you at 6:45 Central Time early in the morning, and look forward to another great day of trading.